Fortinet stock price is soaring in 2024. It's up over 50% year to date as of this recording on November 14th. Of course, I'm happy about that. I've had Fortinet stock rated as a buy all year long in 2024. In fact, it started 2024 on my list of top 25 stocks to buy for the year. The company reported quarterly financial results on November 7th, and so I'm going to update my buy recommendation for Fortinet stock in this video. I'll let you know if I still think the stock is a buy, hold, or a sell. I'll also review the company's latest quarterly financial results, let you know the big things that investors need to know from the company's latest figures. So let's jump right in. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so one of the bigger things that investors need to look out for with Fortinet is their billings growth. And in the most recent quarter, they reported 6.1% increase in billings to reach $1.582 billion. Now, the reason this is really significant and really positive for Fortinet is because you'll notice in the first quarter in 2024, they printed a negative number in this metric, negative 6.4%. And then in the second quarter, it improved to being flat. And then now in the third quarter, you see 6.1% growth. So 2 consecutive quarters improvement here after they spooked investors following the first quarter. In fact, this was the primary reason I took Fortinet off my list of top stocks to buy. I was concerned about the billings growth. And zooming out a little bit more, I was concerned about the reason for the decrease in billings growth. If you remember, late last year, when I was following cybersecurity stocks, I noticed a big risk to the industry. And that was one of the bigger players in the industry, Palo Alto Networks, really changed its strategic focus. It decided to go after market share by deploying a strategy of offering free trials and trying to get customers to sign up with them for more services. And to do that, they offered their clients, if they were with another cybersecurity provider, they said, you don't have to pay us until your contract with the other cybersecurity provider expires. So in other words, letting the client sign up with Palo Alto Networks, even if they had 6 months remaining or 9 months remaining with another provider. And I was concerned about the shakeout of that strategy. I was concerned how competitors would react to Palo Alto Networks taking that aggressive stance. So those concerns were partly why I downgraded Fortinet stock from a top stock to buy, but I still had it rated as a buy because I still like the business's long-term prospects. And then that's why the company reported negative year-over-year growth in the first quarter in billings, because undoubtedly many of the customers industry-wide that were considering their options for cybersecurity, some of them went to Palo Alto Networks given their favorable offers, incentives to customers. But it's great to see that Fortinet has stabilized here. Following that one negative print, it stabilized flat, and then now it's up again. And in the fourth quarter for 2024, the forecast is for another positive quarter. I'll share the forecast with you a little bit later. So that was really good news from Fortinet there. And then when you look at revenue, it's accelerating revenue growth. 7% in Q1, 11% in Q2, 13% in Q3. So that's great to see, especially given the negative streak the company was on. If we zoom back, let's see from Q4 2022, they had 33% down to 32 to 25 to 16 to 10 to 7. So they had 4 or 5 consecutive quarters of decelerating growth, and now they're accelerating growth. The second derivative is increasing, which is an important factor to consider when you're evaluating the long-term prospects of this business. So a really solid turnaround here throughout 2024 for Fortinet stock investors. And unsurprisingly, the stock price has responded to these positive results in the company's stock price jumping close to $95 per share, up from less than $60 per share starting 2024. And of course, as I reminded you, I was happy about that given that Fortinet, I've had the stock rated as a buy all year long. I last updated that recommendation on August 9th. I'm going to update this again towards the end of the video and let you know where I rank the stock today. So looking at the company's margins, we get more good news for investors. You look at the operating income line item here in the third quarter, $544 million in operating income in Q3 2024. That's up meaningfully from the $371 million in operating income in Q3 2023. That also boosted the operating margin to 36%, up from 28% in Q3 2023. So the company operates with excellent margins, and that's common throughout the cybersecurity industry. Many of the companies operate with excellent margins, and the prospects for the industry are also excellent over the next few decades. Cybersecurity is becoming a must-have. It's no longer a nice-to-have. Companies are required to have strong cybersecurity controls, and that's only going to increase over the next decades. As our lives become more digital, the needs for cybersecurity will only increase. This is inevitable. This just depends on who's going to take more market share in this industry, but undoubtedly the industry will grow over the next 2 decades at the very least, perhaps even longer than that, as our lives shift more and more towards digital consumption, digital everything. Looking ahead, as I highlighted earlier, the company forecasting growth in billings again in the fourth quarter of 4.6%. This would be a deceleration from the 6% it returned in Q3 if the company actually hits this 4.6% target. If it beats the target at 6.1% or above in the next quarter, you better believe the stock price is going to jump following that announcement. However, if it hits 4.6% in the upcoming quarter, it will still be positive. Still, if you back out, remember that billings eventually turn into revenue. And so that's why billings are so important for Fortinet. The revenue that the company will report in the upcoming quarter, that's largely a result of the billings, the contracts that it signed in previous quarters and previous years. So the billings that the company will report in the fourth quarter is what will determine what revenue the company reports next year and the year after that. So that in that way, investors can get an outlook into the company's future prospects. Management is forecasting a sequential improvement in operating profit margin. Sorry, I shouldn't say sequential. I should say year-over-year improvement in operating profit margin, forecasting 33.5% at the midpoint, up from 32% in the same quarter last year. So solid improvements across all key categories from Fortinet, and industry conditions are improving, and the risks from those big moves from Palo Alto late in 2023 and early 2024 look like they're having a muted impact on industry competition, which is good news for investors. Fortinet is now trading at a forward price to earnings of 39, which is roughly the most expensive this stock has been all year long. So even though the performance has improved meaningfully, the valuation has also increased. So given those factors, I'm not upgrading Fortinet stock. I'm not putting it back in my list of top stocks to buy because the valuation has also increased along with the better performance. But I am reiterating that I still think the stock is a buy, and I'm updating that recommendation on November 14th. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.